Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Crillo. Today we have Whitney Ward. She founded her firm CRE Endeavors in 2019, and since then, Whitney has advised multifamily and single-family rental operators and intermediaries on more than 20 acquisitions and dispositions and evaluated more than $1 billion in multifamily, single-family rentals, and mixed-use retail investments. So, Whitney, thank you so much for being on the show today.
Thank you for having me. I'm excited for this conversation.
Yeah, no, it's great. Please let our audience know a little bit about yourself, both personally and professionally, prior to forming your current firm.
Yeah, so that journey is a long one, but I'll make it as short as I possibly can. My background, I actually grew up in the DC, Maryland, Virginia area, went to school at George Mason University. While at George Mason, I played Division I basketball, so I had an opportunity to play at the NCAA level. And after graduating, I spent some time, how most people go straight into the corporate sector. So I started my career in leadership, sales, marketing, and management roles. I was with, Fortune 500 companies, Coca-Cola, Enterprise. And actually, Coca-Cola is what kind of moved me down to Atlanta in the sense of, looking for an opportunity to grow my career. And so I was, initially at the beginning of my career, I was looking at, doing that 9 to 5, that corporate route, right? And, having a 401k and then, at some point retiring. And as I, accumulated more information about, just the reality of finance and where I was, I knew I needed to do something that was going to give me an opportunity to really grow to where I wanted to be.
So, why did you choose real estate as your investment vehicle? I always ask people because there's so many different ways you can go as, for going from professional, a corporate W-2 into something different. Why would you choose that as your vehicle?
Yeah, so there was two reasons. One, the main reason, and it was also why I chose multifamily, is it's tangible, but then multifamily because when you think about what we need to survive, you need housing, food, water, shelter. So it was like, what investment vehicle could be proven over market cycles, and then that what led me to real estate. The other thing was in real estate, there were so many different ways you could be involved in it. And I know we'll talk about this later, but I started my career in the brokerage advisory sector space first to learn the asset and help people make money in the asset before I, really dove in it from an investment side on my end.
So, when you were doing that, how did that transition kind of work for you? And how did that kind of migrate its way over to what you're doing now?
Yeah, so the reality was I came from corporate. I knew business operations, I knew hiring, I knew how to execute profit and loss and all that. But the reality was real estate wasn't my expertise at the time. So what I focused on first was getting into brokerage, learning the investment from a less risky perspective or position. And then I dedicated all that time really into investing into my education. So I started learning really how the capital stack worked, how to really evaluate deals and what made a deal a good deal versus a bad deal. I learned from other people's mistakes, to be honest with you. I've seen, people buy bad investments and learned how they did that or why those ended up being bad investments. And then as I gained more knowledge in those spaces, I was able to then bring value to, like you mentioned earlier, like the developers and the private equity firms that I've helped in the past acquire or divest from investments. So it was for me, it was like, okay, you don't know what you don't know. So you need to learn this space, right? And dedicate that time into this space. And then as you grow in this space, you'll find out ways to bring value to other investors and then build your career from there.
Yeah, that's really interesting because I find a lot of people in this space aren't in real estate beforehand when they're getting into syndications. They're coming from a completely different field. And it was one of my partners that brought it to my attention. He's a broker, and he was telling me, he goes, most of these people are coming from a whole different field. You have some people that are in real estate already, and then they're going into syndication. So it's a great way of you really learning the business from the bottom up, going through brokerage. Because I always find that with most brokers, even commercial ones, there's some little disconnect between the brokerage side and the investment side. And if someone's actually an investor that's on that brokerage team or vice versa, it changes, I think, how they're looking at the deal and more through your eyes. And I think it's not just, because they're giving you numbers and you're like, well, that's not true.
Right, exactly.
Yeah.
Well,
That's
in all fairness, because I'm a broker, in all fairness, it's your job is to sell the deal, right? So I always the ones that really care are the ones going to write that check, and you're gonna you're gonna double check all that stuff. So yeah.
so it's literally, I was selling a property years back, a portfolio and of properties, and they were sending out, and they would send me a copy of the performa, what they're putting it out, and I was like, like, really, these rents are achievable, but there's has to be such a massive value add. You know what I mean? And I understand they're getting the best price from me, and that's the best thing. But just thinking about that, because now you look through that other lens when I'm on the other side of that table, and then you're like, okay, this is like, I really have to verify all these numbers with what I'm willing to invest into the property. So just to, obviously everybody's, has their own niche of what they're doing within this huge real estate realm of investing.
Yeah, there's so many people with different, I guess, positions in the deal and motivations as well. So yeah.
For sure. So give us an overview right now of your firm, CRE Endeavors, what you do there, and how you help out other people.
Yeah, so like you mentioned earlier, we launched in 2019. Prior to 2019, I was a real estate broker at KW Commercial, and then I shifted and started my own independent brokerage firm to allow me more flexibility in what I was really trying to build with the firm, which was an advisory and consulting real estate investment firm. So in the early years of CRE Endeavors, we spent a lot of time brokering transactions, whether it was helping private capital acquire multifamily and single family residential investments, or we were advising on the exit of the deal. And a lot of times that meant that we were, repositioning the asset in some asset management or property management consulting role, and then transitioning into a disposition. So that's how we first started. And then after I spent a short time for a year with a small private equity firm based in New York. They did a lot of pre-IPO venture capital investing, but they wanted to grow out their commercial real estate division. So they brought me on as director of acquisitions. And during that time, they ended up acquiring 2 deals, but it was during a higher interest rate, growth. And so long story short, it did not work out. But at that moment, seeing how the market was shifting, I was like, okay, well, I know my markets. I've advised, capital on a number of deals, and where the market is now shifting. There's an opportunity as a buyer. How can I add value? And then this is what led to me launching my fund, which is focused really on the preservation of workforce housing, and then also has a component of offering co-GP joint venture equity into those deals along with emerging sponsors that are local to the markets.
Yeah, that's great. I have to say one thing in preparation for this episode. I was on your website and I was reviewing everything, and you have one of the most detailed criteria strategies honed in. And that's something we provide to our investors. We have a sheet that we provide to potential new investors that kind of outlines everything. But it was very detailed on how you did it. And do you mind just giving us a little bit of an overview? Because you have a lot of people that throw around like co-GP, and really what they're doing is incorrectly just bringing cash to the deal from their investors. You guys have a whole kind of, I guess, a whole thing like in suite that you're like bringing into a sponsored deal. Can you kind of let us know exactly what other services that you're providing? Obviously, your brokerage knowledge and everything like that goes along just besides the capital.
Yeah. So just to touch on the first part of your question, the reason our strategy, or to emphasize the reason that our strategy is so specific, is this is fund one for me. I have experience in multifamily. That's what I've been doing the last 10 years. So, I wanted to, for fund one, provide a very detailed investment strategy. So, initially, when someone launches a fund, most people say it's a blind pool or whatever. Ours is arguably not blind at all, because we're very specific on the types of deals that we'll invest in. And as it pertains to the co-GP or joint venture equity, for those listening, if it's your typical GP LP structure, we would come in at that, normally the GPs bring in 5 to 10% to the deal. We would participate in that 5 to 10%. And then we could then also bring in our LP relationship equity that would then come in at that 90%. In addition to that value, we also, which I know we'll talk about later, but we have development closeout services that we've done on behalf of institutional developers. which has provided us project and construction management experience and resources. And so we could also help on the renovation and construction management side for value add strategies that we invest in.
Yeah, no, that's great. And I thought it was, you've put it down to 3 different markets that you guys focus on, 3 different states. Is that correct?
Yep. Georgia, Tennessee, and South Carolina. Everything's within, like, we're headquartered in Atlanta, so we wanted to stay within a 4-hour radius of Atlanta.
Yeah. And I think it becomes, I see investors as much more serious the more fine-tuned and specific their investment criteria is. You know what I mean? When it starts like really wide and you're like, I mean, how do you even close a deal if it's like on so many different markets or something like this? I mean, how would you even know about these different markets? You know what I mean? So,
Exactly.
but when you've really, kind of drilled down to where it is, then we're like, oh, wow, this is like, you guys really put a lot of thought in that. And you've obviously done a lot of deals, because when I look at the different requirements you have for the people you're partnering with, how the management is structured, I mean, everything like that, it just goes to show, I mean, how kind of, precise you guys are with how you're finding deals.
Yeah, I think it's better to just be what we've been, experts in your space. We can mitigate risk for our investors, and we can do good deals.
The one thing also, as you mentioned earlier, is about the blind fund. And this is one reason I've passively invested in funds before. We've never done one as a GP. And I think the one thing I didn't like about that passively investing is because I'm investing, let's just say, in March, and it's going to close out at the end of the year. And I don't know what the rest of the year has after I put my money in, right? And are we just writing checks in October and September, or are we actually like really underwriting these deals? And that's always kind of like my worry. So like, you having such a specific niche makes it a little bit more comfortable, I would think, for the LPs putting money in, knowing that, listen, if it doesn't check these boxes, like, money's come back. And usually you don't have that specific of criteria.
Yeah, and that's where I wanted to differentiate myself from.
So, Winnie, you guys do a lot of underwriting. You've reviewed over $1 billion in deals. I mean, the last years, you started your firm in 2019. It's been pretty rocky here.
Yeah.
To say
I
the
argue
least.
that I've been through like 3 market cycles: pre-COVID, COVID, and then post-COVID, and then now maybe whatever we're moving into now.
So over those years, I mean, let's just talk like here more recently. I mean, how is your underwriting kind of evolved coming into where we are now at the end of 2024, going into 2025?
Yeah. So right now, everything's focused on the fund's kind of mission and targets. So a lot of what we're underwriting now are opportunities where we see that we can, add value to the property through either operations, or there's some debt maturity, financial stress by the owner operator, or they, operationally are having challenges, and we can come in, add value, increase rents, but we're preserving rents within HUD's 80 to 120% area median income. So we're only really growing rents 3% or 5%, depending on the market, pretty flat. So things are very conservative now. We're still targeting anywhere from 20 to 22% project IRR on deals. But we're also making sure that doesn't mean we have to raise rents 10 to 20%. And we can, kind of accommodate in that preservation of attainable housing.
So I want to talk about the kind of deals you're seeing across your desk now. And I'll tell you, I was talking to another fund manager a couple weeks back. And one thing I was saying that I was seeing over the last couple months, from whether people are sending out stuff for an LP position, or people are sending stuff out to co-GP on, or whatever it might be. And I see a lot of deals coming out that aren't true value add deals. And I see people that got stuck with these too. Well, not really stuck with them. They invested into them in like 2021 in these low interest rate environments. And there wasn't really, the business plan was really raising rents. It wasn't really value add. And I'm seeing that now, where we're just raising rents, like a little bit of money here, a little bit. And I mean, a lot of these markets that you're talking about that we invest in as well are very resilient right now. And it's actually with all this new inventory coming on, which is great and makes you feel really secure as the asset class you're in. However, I mean, I wouldn't want to go into a business plan that's really just taking rents from where they are now to quote unquote market. So what are you seeing for deals right now that are coming across your desk? And, how are people approaching these, I guess?
Yeah, well, it has shifted recently. In the beginning of the year, it's been more, you could tell owners were just trying to shoot in the dark and see what they could get. And then there were some that were in distress where, they were, had to sell. And then you had a lot of loan assumption type deals, but it was very sporadic. It wasn't really that much deal volume this first half of the year. Recently, though, I'm starting to see more of the assets that kind of fit our criteria, the late 80s, I would say 90s to 2000s product. Still some loan assumption type deals, but I'm seeing a little bit more reasonable pricing, getting closer to the numbers or the original ask, which is nice. And I'm also seeing some opportunities in distress with some owners that have to sell because they do have financial debt maturities coming up. So it's interesting. It's still is, even though it's picked up, it's still relatively slow. But I do anticipate with the Fed dropping rates 50 basis points that we're going to see a significant volume over the next 12 to 18 months.
Yeah, I definitely think so, and I think also that starting in 2025, we're going to start going. I think we're over the hump now, and I think 2025 we're going to start seeing these deliveries, start fading away, and then through 2026. So it's going to be a very interesting environment going forward, even though we're kind of like in a standstill here, even though these markets have been extremely resilient with all the new inventory, which is kind of amazing.
Yeah. No, I mean, it's good. I think it's going to be a good time to be in real estate if you're a prudent investor. Let's say, like what we mentioned earlier about, a lot of the, syndicators that might have not had a background in real estate and then got into it, and maybe they were an engineer and got into it and was able to raise capital. I think some will prevail, but the ones that are prudent and really actually understand the markets are going to see some good upside if they're able to raise capital.
So, Whitney, one other part of your business, which you touched on earlier, is your development closeout services, and it's interesting. It's something that we haven't really spoken about much on the show, but it's also a great service that you're adding to people you work with, but also kind of keeps your finger on what's happening in commercial real
Exactly.
estate, which is awesome. Just like your brokerage part of their business. Can you explain what development closeout services are a little bit more in detail, and kind of how you partner with developers, contractors, and investors?
Yeah, so the development closeout process is really that renovation or construction to certificate of occupancy. We represent the developer, owner rep, and we ensure that the developers and the architects' plans for that property, as well as coding, is up to par. So we kind of have that final voice of whether or not a deal gets across to certificate of occupancy. So we're really responsible for ensuring that the GC and the vendors associated with the GC execute on whatever needs to be done for that property in order for it to get to occupancy. And like you mentioned earlier, it actually came as a service line out of a friend that had been a GC for 30 years in the Georgia market, and he went and worked for an institutional developer, and he had this problem, and he reached out to me, and we worked with them, and all of a sudden it just became something that was needed in a business line that really has brought value. I mean, we've done over 2,000 units just in Georgia, and continue to get contracts.
Yeah, it's great to have like a complementary part of your business, because with a syndication model, it's just a longer term kind of business plan, right? And then having something where you can stay involved with what you're doing, but maybe it's a different kind of pay structure where you're getting compensated earlier than later. Whereas like with funds and syndications, it's mostly all in the back end, if not all.
Yeah, I mean, that's definitely, you know my business very well.
So one thing that I saw that you've played Division I basketball, and how does that experience helped you succeed in commercial real estate investing? Because commercial real estate, as I found out over the years, is a very team sport as well.
Yeah, so that's interesting, but interesting of a question because I did play D1 basketball, but I felt like during that time I was very distracted, and I ended up partying a little bit more than I needed to and wasn't as focused, and could have possibly had a career professionally had I stayed focused. Ironically, now I train and compete in Brazilian Jiu-Jitsu, which it has, now that I'm older, more mature, I realize I now, because of these two sports and seeing my past career and saying, hey, I had an opportunity, but I let it go because I didn't stay disciplined. Now, as I'm older and I'm training jujitsu, I bring that discipline, and it has transitioned into my professional life. It's like a marriage that has made me a better person all the way around.
No, that's great insight there. Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carrillo, founder and managing partner of Harborside Partners, and since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. So for people that are interested in kind of following the path that you took to starting in corporate, going into what you're working on now with your own business and investing in real estate, how do you advise people to maybe follow your path, but maybe a little different, or do something different than you would?
Oh, definitely do not do what I did. But I would say if you know, like I didn't have the foresight to know that I liked real estate. I didn't even know real estate offered everything that it did. I was never exposed to it. So I learned later in life. And if I had known about this earlier, I would have dedicated my time and energy into this during college. And so I would suggest starting early. If you know early and you're a college student, or in your early 20s, maybe start with an internship where you can get an opportunity to work in commercial real estate, whether it's from brokerage, property management, investment management, and just get exposed. We have an internship program that we've done successfully with all the local universities here in Georgia. And have definitely helped a lot of young people get to the next level. And I'm proud about that, probably most of all. So, I think it's, start early with that. If you're older, and you're getting into the real estate space later in life, like I did, I think, finding, an advisor or a mentor, or, even if it's, someone that's just smarter than you in the space that you want to get to their level, and start really following what they're doing and learning, where they go and how they network, and developing those skills that you're going to need in order to be successful in this industry.
Would you suggest people becoming a broker before becoming an investor?
Depends. I mean, for me, it worked because it allowed me to earn money in the business and learn the business at the same time, because I went full time. Once I left corporate, I've been an entrepreneur since. So, but if you don't have the appetite for that, I think, and you're like still maybe working or something, I think the better decision might be, look for an investment management company where you maybe can intern or learn, get involved in that space, and then keep your other job and then just go directly into investing. I will say that being a broker and investor, I think it's impossible to do both. I struggled for a very long time trying to figure that out. I think we're probably closer to doing that now, being an equity solution advisory type firm, and we could have equity brokers and all that stuff if I wanted to. But I think really for me, I love asset management, fund management. I love finance. So we'll stay in this direction. But I think it's very hard to marry both of them and do them at the same time.
Yeah, that makes perfect sense. I think it would be, if you finding an advisor, I think would be a little easier maybe on the brokerage side, because you're working underneath someone. I think it's a little bit more difficult to find people, especially if you're looking for like mom and pop investors to like mentor you or advise you. It always becomes a little bit more difficult, I find, because you have people that probably they don't have maybe as big of a goal as you do, and maybe they're not doing stuff as efficient. I mean, it's a whole different thing. It's not like going into a corporate kind of real estate environment.
Exactly.
So as we're kind of closing up here, what are some of the main factors contribute to your success over the years?
I'm very spiritual, so I would say God, and I mean that 100%. I believe that we have to be our best versions of ourselves, and then at that point, have unwavering faith and just commit to the process and trust it. And so that's what I do day in and day out. I do the best I can, and then I leave it to God after that. And so, that's, I would say, the number one, successful trait that has led to this where I'm at today.
Said perfectly. So how can our listeners learn more about you and your business, Whitney?
You can reach me on LinkedIn. It's just Whitney Ward, or our website at www.cre-endeavors.com. both of those are great opportunities.
Well, Winnie, thank you so much for coming on today, and looking forward to connecting with you here in the near future.
Yeah, I had it. This was a good conversation. Thank you for having me.
You're welcome. Hi, guys. It's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.